We think too many investors look at Chinese economic growth and don't pay sufficient attention to their balance sheet. What we've seen in China the last 10-15 years is a heavy fixed asset investment program, which has been building bridges, real estate, commercial and residential, roads and ports. It's been great for the Chinese economy, but what has resulted in is overcapacity in the Chinese economy. The Chinese saved us in 2009 here in Australia by engaging in stimulus, and again in 2011. The problem is they've got overcapacity, as I said. What we really needed to see, what everyone in the world really wanted to see from an investment perspective, is China make the transition from a fixed asset investment-led economy into a consumption-led economy. And that was likely occurring, but the latest bout of stimulus suggests that's not going to be the case. They're going to try fixed asset investment again. And so you've got a situation now where that fixed asset investment has been fueled by debt, and you've got credit issues in the Chinese economy. Just as one way of looking at it, if you look at the top four Chinese banks that are listed, they've got an equity value of about US $700 billion, and that's holding assets of US 11 trillion. So the market's saying there's about 5.5–6% of equity in those Chinese banks. We think non-performing loans are going to rise markedly over the next few years. They did hit 20% 15 years ago. They're around 2 or 3% now. There's a good chance that equity gets wiped out in the Chinese banking system. That will mean we'll need to see recapitalisation of the Chinese banks, and we think that'll be a difficult process, likely successful, but nonetheless difficult and painful, and we think it's going to be poor for global markets. Look, I think what we've seen is a rally in the resources on the back of this Chinese stimulus. Resources have rallied very, very strongly over the past 3 or 4 months. We think it's a great opportunity to probably reduce or sell your holdings of resource companies based on our view that the Chinese stimulus program won't be sustainable, and it will cause credit issues in the Chinese economy, which will filter back here to Australia.